This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Riley Smith.
Good day and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Riley Smith. Today is Tuesday, October 1st of 2024. We are so glad you can join us for today's show. In today's episode, I have an update from the U.S. Meat Export Federation about the impacts of the strike on the East and Gulf Coast ports, specifically the impact it will have on the U.S. red meat industry. I also have a clip of our latest video with Beck's Hybrids. For our Beck's Hybrids Harvest Tour, Andy Peterson was down in Southeast Iowa to do some traveling for that. But before we get into any of that, let's go ahead and hear word from our sponsor, the Iowa Soybean Association and the Soy Checkoff.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Riley Smith. Well, starting off the news segment for today's show, I have Dan Halstrom, President and CEO of the U.S. Meat Export Federation. Of course, the strike at the East and Gulf Coast ports went into effect at midnight this past night, and now we are going to see the impact of that on the red meat industry here in the U.S.
The largest ports for U.S. beef and pork exports are on the West Coast, the three big ports there. But that doesn't mean that the East and Gulf Coast isn't important. We look at total waterborne exports of pork. About 45% of those go through the East and Gulf Coast ports. And on the beef side, about 30% of the waterborne exports. And, that 30 might sound a little low, but it doesn't mean it's not important, because there's quite a high percentage of chilled beef that goes out, very high value chilled beef that goes out from the East Coast in particular for destinations like Europe and Middle East. So we can't overstate the importance of the East Coast and Gulf Coast ports. Even though the West Coast is larger, still a very significant quantity is exported through the East and Gulf Coast.
One of the potential solutions brought up was to redirect that shipping traffic to the West Coast, but Halstrom said that is not a viable option.
Redirecting to the West Coast is a potential very short-term solution, but it's not by no means a long-term solution at all, because it's not just U.S. beef and pork. You've got grain, you've got all sorts of commodities that use these same ports. So we're challenged to export all of our product today using all the ports, and so we cannot afford a shutdown in any part of the supply chain. And this is another important point. This will back up the supply chain immediately if there is any kind of a shutdown on the East or Gulf Coast ports.
When it comes to the red meat exports, a lot of the impact is going to be to the variety cuts. Halstrom said that's going to have a pretty significant impact on carcass value.
The key to our export model is exporting as much of the carcass as we can. And one of the parts of the carcass that we sometimes don't talk enough about is the variety meats. And while the prices relative are lower compared to the muscle cuts, it still has a very large return to the producers. On the beef side, variety meats account for over $40 per head. On the pork side, it's over $10 a head. These are products that would be at risk in terms of definitely in terms of shipping on time or shipping at all if there is any kind of a shutdown. So yet again, another reason to do everything we can to make sure we don't have any kind of interruption of service.
That again was U.S. Meat Export Federation President and CEO Dan Halstrom. Also in today's episode, if you haven't seen it already, we have our first episode of the Beck's Hybrids Harvest Tour. Andy Peterson was able to get down to Southeast Iowa to visit with Mark Nolan and see how harvest is going for them, as well as some of the unique practices they have on their farm. Here's a clip of that video.
Talk to me a little bit about your operation. Obviously, somewhat unique, filling the bags as well.
Yeah, we started that last year. I did it for a storage standpoint, pick up some of the carry in the market, hold some corn. That was probably the wrong thing to do last year. It makes harvest go so much faster. You just set a bag and fill it. You put 23,000 bushel in a bag and move on to the next bag and do it right there in the field. So far, it seemed to work really well. It's not a long-term storage. You've got to get the bags cleaned up.
Relatively minimal damage then from the bagger, and
no damage from the bagger. No. As far as moisture goes, whatever you put it in is what you take it out. Like now we're putting 19% corn in the bag. It'll come out at 19%. It seals the oxygen off. It comes out exactly like it did before.
Stay tuned as well for the rest of our Beck's Hybrids Harvest Tour coming out in the next couple of weeks. Right now, let's take a look at the closing markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day in the ag marketplace, we're here with Ross Baldwin of agmarket.net. First off, Ross, what do we see going on in the grains today?
Had a mostly firmer day of trade again across the grain markets. Corn was 3 to 5 cents higher. Soybeans backed off going into the close, which has kind of been a general theme here lately. Beans find strong buying at 7:30 in the morning and rally most of the day, but run into hedging pressure later. So beans ended the day back near unchanged. The last trade of the day, November soybeans were a half a penny lower. And over in the wheat market, Kansas City and Chicago wheat were both about anywhere from 12 to 15 cents higher. So they had another really impressive day as well.
And now looking at the weather in South America, it really does look like those monsoonal rains are going to manifest down there. So with that being said and having that rain in the forecast, what's that doing to the markets back here?
I do think that has softened, the forecasted rains has softened the bean market a little. That said, beans, yesterday's high post report was 1069.5 for November beans before they backed off, and we settled today at 1057. So beans aren't too far off of the highs, but it slowed it down. That coupled with the U.S. harvest hedge pressure that we're seeing big spots across the scales from the farmer. So the two of them combined are starting to slow down the velocity of the bean rally, it appears. But a lot of these rains that are forecasted remain forecasted 10 days out. So I think the market's still in a wait and see approach, and until those rains materialize in a meaningful amount, I think you're going to see beans continue to stay firm here. But it's still early. It's October 1st. You really got to get past October 20th for it to become a big concern for the South American bean crop. So we do still have times if the rains start within the next 10 to 14 days, you could see this bean market fall back under pressure here in a more meaningful way than what we're seeing.
And then looking at the livestock side of the marketplace, how did cattle and hogs trade today?
Had a mixed day of trade across the cattle market. Live cattle stayed in the green. October was 70 cents higher. December ended the day nearly 40 cents higher. Feeder cattle, they were mixed. They were anywhere from the nearbys being 5 cents lower to the far out months being 50 cents lower. Feeders were trading about a little over $1 higher on the nearbys for quite a while during the session before they ran into pressure. Here, really within the last hour of trade is when that developed. And interestingly enough, that was also the same time that soybeans started pulling back off of their highs. Right around 12 o'clock, November beans, they were on their highs the day at 1065, and feeder cattle were on their highs. Live cattle was on their highs. And I think one thing to take note of is crude oil was over $3 a barrel higher. And the last trade here right now, we're about $1.70 higher. So crude oil is nearly $2 off of the highs. Now, a lot of the move in crude oil was fueled by Iran attacking Israel and sending missiles there. They are still doing that. It doesn't seem maybe as bad as what was initially feared when they were saying that the Iranian attack was imminent on Israel this morning. And so crude priced that in, and commodities went right along with crude. And then as crude backed off, the commodities backed off as well. So I think that's something to watch moving forward. We also The S&P and the Dow they're still down about 40 points, but they're well off their lows as well. They were pricing in the Iran-Israel situation. You got the East Coast port strike that's also going on that went into effect at midnight here. And so there's a lot of moving pieces to keep monitoring moving forward, and that could really have a significant impact on the outside markets, which could spill over into commodities like we're seeing.
All right, Ross, lots of great information today. For those of our listeners and viewers who would like to get in touch with agmarket.net, how can they do that?
You can reach me at our office here in Anthony. Our number is 712-373-3276, or you can visit agmarket.net to find any of the ag market brokers.
Great talking with you as always, Ross, and we look forward to hearing from you again soon.
Thanks for having me.
That again was Ross Baldwin of agmarket.net. We'll take a look at how those numbers closed through the market window at iowaagnet.com. December corn up 4 1/4 at $4.29 even. November soybeans up 1/4 cent at $10.57 1/4. October soybean meal up 5.70 at $3.50 even. October soybean oil down 60 cents at $42.91. Chicago wheat up 15 even at $5.99 even. Kansas City hard red wheat up 14.5 at $5.98 1/4. Minneapolis spring wheat up 13 even at $6.34 3/4. December oats down 4.5 at $3.88 even. On the Merc, October live cattle up 70 cents at $184.47. October feeders down a nickel at $246.15. October lean hogs up $1.25 at $83.50. Pork cutout up $1.17 at $91.87. And October class 3 milk down 22 cents at $23.09. And that's been a check of the markets here on Ag Matters PM. That also brings us to the end of today's episode. You can find all of our content on our website at iowaagnet.com. Also follow us on social media at Facebook, X, LinkedIn, and TikTok, and find our video content as well as previous episodes of AM/PM on our YouTube channel. Don't forget to subscribe and hit the notification bell to see when those videos go live. Check out as well our free morning, midday, and closing market podcasts, as well as the Iowa Ag Matters podcast and Pods of Potential. You can find those on your favorite podcasting service at Apple, Amazon, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of Dustin Huffman, Andy Peterson, and Mark Magnuson, we thank you for watching. This has been Ag Matters PM.